Welcome to the Napa Valley Insider podcast. I'm your host, Andrew Allison, Chief Growth Officer of Preferably, the leader in wine, spirits, and food recommendations. This show is brought to you by Tastefully, the Napa Winery Guide app. Download Tastefully today to start planning your Napa Valley wine country adventure. All right. Welcome back. Thank you for jumping on the podcast today. Who are you and what do you do?
Noah Friedman here. I'm the co-founder of TopShelf Ventures and co-founder of Uncharted. Uncharted is a founder and investor community that I started with a longtime mentor and now friend of mine named Michael Loeb. So think intimate dinner series and big annual summits, invite-only, gathering some of the world's best entrepreneurs and investors in extraordinary places for intentional conversations. And TopShelf Ventures is the alcohol and vice industry's private equity and VC fund. So we focus on emerging brands, opportunities, and big bets in and around the booze business and things around it that might be construed as vice, like nicotine or THC, et cetera, but really focused on the alcohol business.
I'm super excited to have you in the chair today and ask you a couple of the questions about TopShelf Ventures and Uncharted itself, but maybe we could rewind the clocks. How did Noah become a VC in the alcohol space?
The very quick background and origin is I started my career with Michael Loeb at his family office VC accelerator hybrid that he runs. I met him when I was 19 and he took me under his wing very early. And after a few years of working for him in college, which I would say dramatically accelerated how much I was able to learn about venture, not only from an academic perspective, but from a real world experience perspective, getting to see live deals when I was at school in Boston. And then when I graduated, I was fortunate enough to graduate into sort of a junior exec position within his firm. And one of the first businesses that he had me work on was a pre-seed stage alcohol analytics business that didn't have a name and just had a somewhat proprietary piece of technology that I ended up kind of coming on as the co-founding team COO of the business, which we scaled to a few thousand independent retailers nationwide. And in short, we were collecting billions of dollars of receipt level transaction data from independent alcohol retailers across the country. And coming from a non-alcohol background of more, just venture and interest in tech and business, getting thrust into the deep end of the booze business, my epiphany was, wow, this alcohol industry is insane, right? The volume, the scale, the TAM, the trends, the liquidity, no pun intended, the M&A cycles they're rivaling that of what I'm seeing in the tech business and tech ecosystem. And you look around New York City, San Francisco, LA, you throw a stone, you hit 6 guys or girls with a VC fund focused on tech. And yet these alcohol businesses were struggling to find anyone that was focused on their space to raise money from. And at the time that just felt weird. And the more that I got into it and the more that I started to understand how both capital markets, private and public, but really venture and private equity work, the more it felt like an opportunity. And I was fortunate enough to meet my now partner, Jason Sherman, who at the time was helping run AB InBev's venture arm. And he was seeing something similar from the M&A perspective, which was that the brands and businesses in general in the booze space that were able to transcend the challenges of early stage startup and actually showed that they had velocity and good business models, and more specifically the ones that really explode, end up being very valuable enterprises often. And yet there was almost nobody focusing on how to find them, fund them, accelerate them, coach them, mentor them, all the things that a good capital partner should do in the early and growth stages. So we put our heads together in 2021 and said, what would it look like to start this thing together? Did a first close of TopShelf Ventures Fund 1 in September of 2021. It just so happened that I hosted my first ever Uncharted dinner in May of 2021. And the two things started to slowly build side by side, either fortunately or unfortunately, around the same time. So we did first close of TopShelf Fund 1 in I think September 2022, and we made our first investment into a company called Grazi in November of 22. And I think that since then we've kind of just been executing and continuing to build on the thesis of what it looks like to be sort of the preeminent fund, private equity venture in the booze business and beyond.
There's so much that we could talk about that's in the portfolio. Maybe I could just ask a question about finding the energy to harmonize between community building and actually being a VC. What makes a good community builder in today's market?
That's a great question. What makes a good community builder in today's market? I think community is thrown around as a buzzword very often, and for good reason.
Totally.
It's an attractive proposition to be able to gather people intentionally and let them drop their guard and bring good groups together. Very hard to do well, and I'm not saying that we're the masters of it by any means, but I think good community builders today have a talent and special ability either through themselves or the teams and the people they bring around them to create effective containers. And I use the word container very intentionally because I think it means a very intentional blocked off space, either physical or digital, that allows for intentional connection and a hyper curated group. Meaning the reason people want community is because they want some semblance of connection and connectivity with people that they either want to meet, have something in common with, or can find some common ground with. And so community builders' jobs is to create the container where those types of intentional conversations that are different can happen, and then fill the container with the right mix of people and energy that facilitates that. There's a lot of different ways to skin that cat. You can do matchmaking dinners, you can do cocktail parties, you can do all sorts of things of how you build that community around a shared interest. But my honest take here, and this is why it's very hard to do this well, is that the real secret to effective community lies more in the energy than it does any of the, tactical things like where you do it or who. Like, it's really about the energy that you can create in the room. Because I think the people at the highest caliber, certainly the types of people that we try to gather at Uncharted, are the types that frankly have no interest in going to lame events. They're too busy, myself included, right? Like, I turn away most dinners that I'm invited to these days just because it's not that appealing to me. There's a lot of work to do. You want to spend time with your husband or your wife or your partner or your kids. And so to give up time out of your day to go meet other people that you may or may not know, you have to have a high level of trust that the people in that room or that container are going to be exceptional. And more importantly, that whatever container you're going into, the organizer, the community that you're participating into, is going to do something special to make sure that it feels different, nice, and conducive, right? I think there's a very fine line between pulling an event together that has a great venue and amazing people in the room, and that event sucking because you didn't go to any extent to try to make it special, versus an event that people leave and say, wow, that was memorable. And so much of that is in how you curate it, how you kick it off, how you set the tone and the table, literally and figuratively. And there's an art and science to it. And we've worked very hard with Uncharted to try to nail, at least in certain instances, the format that really makes it memorable.
I believe, as somebody who's been in the startup game for a long time, community building, as you've described, is so challenging that I consistently feel like I'm out of bandwidth. But I'm more than happy to help any other entrepreneur or network or anybody that might be able to be helped by me. But the one ask that I have is that they stay in my network for a long period of time.
Right.
And so I'm more than happy to help anybody, and I don't need anything for it, right? Like, I don't need to be paid monetarily or anything. But if I can help another entrepreneur in this space, I'm more than happy to help.
Right.
But, it's like, will this person be in my network for a long period of time? That's usually the litmus test.
Totally.
That I try to qualify things through. And the way you describe community building, it's you've seen other organizations like YPO become really successful because the organization has brought people around shared values, and values is a whole different sidebar.
Totally. Well said.
From a TopShelf Ventures standpoint, I don't think anybody knows, unless you've worked in alcohol, how hard it is to raise money for alcohol at an early stage. Can you just chat about some of the brands you've backed and why you backed them? Because I think there's no other fund in this space that's not tied to a major corporate that is working on early stage alcohol.
Yeah.
Why? The thesis of why is clear. There's a lot of opportunity. It's a big space, huge TAM.
Yeah.
Let's jump past that. Like, how come early stage alcohol is where you guys decided to plant the flag?
I think it's a couple of things. Number one, we had backgrounds in the space that lended themselves to being able to do this. I think Jason and I have complementary skill sets and experiences that allowed us to get this going. I think, honestly, other people have tried. It's hard to raise a fund. I mean, remember, we raised Fund 1 in arguably the hardest 2-year cycle in the last decade plus to raise a first-time fund. And this was two guys who had never run their own fund before. We had independent track records, but that's not always enough. And so there was a lot of just relentless hustle and me being on a plane every week and refusing to quit until we had enough critical mass in Fund 1, which was a small fund, to get it done. So to be honest with you, a lot of this was just about, we saw the vision, we saw the opportunity, and we just relentlessly executed. And I could tell all sorts of fun and horror stories about what it took to get the first fund off the ground. But like, it was very hard, even with a compelling story and narrative. And luckily Fund 1 has worked out, knock on wood, pretty well, if not exceptionally well, but it was hard. Why we picked it, I think for all the reasons I described, right? We just saw in alcohol a massive opportunity. I think venture and private equity has been a hot thing for people to want to get into in recently, but we're sitting here in Napa. We could drive down to Silicon Valley or SF, and there are endless funds of people just like me chasing tech, and for good reason. Clearly there's precedent for how much money you can make of that, but that's crowded, right? It has gotten very crowded in the tech ecosystem in a way where it feels like a lot of the alpha and how these businesses at this early stage can be priced in terms of their valuations and what the real path to exit is, especially given how big some of the funds are getting. Like, it's a crowded space, right? And a lot of the glory days of VC was when you could get into companies like Apple and Google and even Nvidia at valuations that weren't laughably high, right? Not saying you can't make money in it right now, but it's crowded and it's competitive. And I think on the flip side, we saw in alcohol a multi-trillion-dollar market with plenty of precedent for massive exits, a business model on the large supplier side that is largely predicated upon their ability to continuously evolve their portfolio so that they have new things to sell the consumers that buy from them across the country and the world. You have in those suppliers groups that have admitted, and will continue to because it's right, that they are much better at buying than they are at building, which means they have to be M&A machines. They're proven to be quite good at that, at buying things at reasonable, if not healthy, multiples on revenue, making their money back by turning it on and scaling it through the distribution engine, riding the cost curve down because they have economies of scale. And so for all those reasons, there's a very good argument as to why, not only an argument, proof as to why you can have venture-like returns in the alcohol business. But a lot of people have gotten burned because they put money into their buddy's bourbon company when they were in college, or they, one consumer fund took a flyer on an alcohol brand because there was a celebrity attached to it, and they think they're all going to go like Casamigos. So they've gotten burned. And then the other side is alcohol is complicated, right? There's a complicated regulatory framework that dictates how things can and cannot be done. It's not impossible to understand, and anyone with enough background in how venture and business works, if they spend time, they will figure it out. But there's a ton of nuance, political nuance in terms of who the powers are, how they represent each other, who actually holds the keys to unlocking markets. You have to understand both the art and science of that. And I think the combination of all those reasons just meant that there was a bit of a white space in this market for alcohol. And we said, who better than us to at least try to take advantage of it? So
if you had to describe what a great outcome looks like, every deal is different, of course.
Yeah.
But what is your so to summarize this, tell me if I have this right. You are looking at a consumer packaged good alcohol company, and they're of a certain size. Mm-hmm. They have a certain amount of market penetration, and you like the competitive set. So you write them a $500,000 check to buy, 10% of the business, something like that.
Something like that.
And then you help them maybe grow to a couple more retailers and then help them raise their next round. And then they've graduated from your bandwidth.
In Fund 1, yes, exactly that. And I can give specific examples in Grati or Some Boy or whatever we want to talk about. In Fund 2, we've evolved the model a little bit to be able to do a check in that range early. And then as they grow, we not only track them, but also double down with additional capital that's in the seven figures to make sure that they either don't need to raise again or make sure that we can continue to fuel the growth. The thing we're looking for, and the thing that makes a good alcohol brand really exceptional, largely just comes down to, at its core, velocity and retention. There's all these other qualitative things that we can talk about, and honestly, the fallacy of most people investing in TPG is that they over-optimize for the things I'm about to say, which is the packaging or the liquid or the celebrity or the history or the story or all these things that are they're touchy and feely and important, very important. But at the end of the day, this is a business, and businesses are run off of numbers, and there are key performance indicators in any business that indicate the health of that business. And it just so happens that we at TopShelf believe that velocity and retention are generally the most important metrics to track. And so we are looking for the businesses and investing in ones we think either are already showing or have a chance to show exceptional outlier velocity in their category. Because when you have exceptional outlier velocity and retention, you can find efficiencies in how you build your business that allow you to not only grow quicker or, more importantly, more efficiently. But at the core, it indicates that you have product market fit. It indicates that the dog is like the dog food, right? It is easy and possible to buy your way to growth in this business and any CPG business, right? Andrew, if you and I want to start a protein bar company, with our networks, we could probably go raise some money pretty easily. We could probably make a sexy looking package. We could probably make the thing sound awesome. And because we're fairly well connected and know how to do business, I'm sure we could get it into Whole Foods in a couple of stores, and we could tell a great story in a deck about how Noah and Andrew started a protein bar company and it's amazing. That doesn't mean it's a good business, right? What means it's a good business is if when it's on the shelf at Whole Foods, consumers are coming in at a higher velocity and consistency than other competitors and buying our protein bar because they want our protein bar. It's very hard to pull that off. There's so many things that go into the foundation of what makes someone, when they walk into Whole Foods or Total Wine or Bevmo or BevMax, go and pick your product off the shelf. And most companies that we see in the space invert the story, where like the velocity metrics or the revenue is like couched in the appendix of the deck, and they over optimize on like the founder. Like we like the founder story. It's important. I want to know why you're doing it. But the real thing that matters in this business is how quickly does the product sell? Why do people like it? What's your margin and what's your plan to expand? And so most businesses, to be brutally honest, don't have exceptional velocity.
What's the fund one, darling? You've brought up the brand Grazie. Maybe we could delve in on them. I'm familiar with the story just through yourselves and what I see online. But one of the things I've always admired about yourself is sharing candid opinions openly on LinkedIn. Not enough people do that, but maybe you could share the Grazie story and why it stood out as an outlier, because I think the wine industry in general here in Napa Valley, everybody, and I'm very unique in the opportunity I get to sit with some very capable leadership teams across a bunch of great wineries and wine brands. And they all say the same things about wanting to be different, wanting to really elevate a tasting program. They really want to think about, a playbook that's unique to their brand and their brand story. You can't do some of these things by committee. And if you aren't willing to take some risks, it's really challenging. And so if you want to be an outlier, you have to behave like an outlier. So maybe we could delve into Grazie, because I think the ability to pick winners in a highly regulated, highly competitive landscape has got to be like you really asking for punishment. It's like a glutton for punishment.
I think it's important to establish with Grazie, it's easy now to look in hindsight and see how successful they've been. Of like, it was obvious. It really was not obvious. You have to remember, with boxed wine, for a long time, the only game in town for boxed wine was Franzia, which is very cheap wine.
RIP.
Right. And then it was Black Box and Boda Box. And when they first came out, everyone said, no one's going to buy a box wine for $20. That's way too expensive. And now they're obviously, behemoths of the business and have done incredibly well. And so for a long time, the industry was like, man, a $40 or $50 box of wine would be an incredible business, but no consumer will ever pay $40 or $50 for a box of wine, because the stigma is that box wine sucks. And so the business opportunity is like, who will be able to prove that consumers will pay $40 or $50 for a box of wine? Because wow, that's a big idea, right? It's a really big concept to prove that right. So when we did our first close of Fund 1, that's a big deal, right? This is the new fund on the street. What's their first deal going to be? Grazie hit our plate through 3 separate channels. We got an inbound message from the CEO, and 2 other people referred Grazie to us, one of which was one of our active advisors in the fund. We took a look at Grazie. At the time, they were doing $60,000 to $70,000 a month top line revenue, all through e-com, right? So fairly small business, right? Not zero, but fairly small. Steven, the founder, had built and sold a tech company prior and was kind of just messing around with wine over COVID because he fell in love with wine and said, why doesn't someone put good wine in a box? And so we started to look at the business over when we first did our first close, and the thing that stuck out to us was this guy, Steven, and his team are getting 60 to 70% of their monthly revenue from repeat buyers. So the retention was exceptional. And we dug into the e-com metrics and the fundamentals of the business, and it was very strong, right? And we looked at others in the space, and Steven was 2, 3, 4, 5x higher than anyone else in terms of his efficiency and his ability to acquire and retain, keyword retain customers.
Are they direct to consumer by model, or are they?
They started as a direct to consumer, and with our prompting and guidance have expanded into retail fairly quickly. But at the time, it was only e-com, and his plan and business model at the time had him only staying in e-com forever. but the velocity and retention was unbelievable, right? We just looked at this business and said, if he can even keep up half of this retention the way he scales, the model's going to work, because
the lifetime value is there.
The lifetime value is there, and most importantly, the customers that we're buying, when we actually looked at the demographic and psychographic of who it was not Franzio or Black Box or Boda Box drinkers. They were recruiting in
net new.
Exactly. They were recruiting in from Naomi and Josh and all these kind of $12 to $15 people going into the liquor store and buying a bottle or two of wine every week because they want to have a couple glasses at night. And so we underwrote the deal. We're able to align on a valuation with Steven. A big part of our mandate for when we invested was that he was going to go into retail at some point in the first 12 months, because we knew that for the brand to really do what we believe to be the big true north opportunity, which was prove and be the hero number one $50 box wine on market, the number one premium box wine, we said that's a $1 billion idea. If you can actually pull that off and be the number one player in a category that people in this space thought was impossible, that's a big idea.
The topics that I'd love to hear you comment on, because I think you and I agree on some macro trends, and we're different people and don't agree on other macro trends.
Sure.
I would love to hear your point of view on non-alc, how you think about non-alc and how you think it's going to evolve over the next couple of years. Non-alc wine in particular.
Yeah. So you're talking about literally wine that doesn't have alcohol in it. Non-alc wine, non-alc beer, non-alc spirits. We're not talking about THC. We're not talking about soda. We're talking about things that are behaving like alcohol in their taste but don't have alcohol in them.
Yeah, or maybe it could be de-alkalized.
Yeah. I think there is a real business there. I think it's dramatically smaller than most people think it will be. I think that non-alc beer, I think, has largely evolved to the place where it's going to sit. I don't think it's going to continue to see explosive growth other than the next couple of years.
Yeah,
so I think
totally agree.
I think it's at or around its market size right now. You know, a couple points of CAGR every year. I agree. I think it's going to grow. I think it's interesting, but I think that we are at or near the hump in terms of how big it can get.
Right.
Non-alc wine, I don't see a huge market for it personally. I really don't see a huge market for non-alc spirits. I think the place it makes the most sense is the on-prem, and I do think it's very possible to build a real business.
Yeah, totally.
In non-alc wine or non-alc spirits in the on-prem. I just think it's pretty crowded and competitive right now, and I think a lot of the decks that I see in the space, because we see all of them, are trying to paint a picture of how half or 3/4 of every cocktail list or wine list are going to be non-alc in the future. I just don't buy that personally.
Yeah, I don't buy that either.
I just don't think it's a real thing. I think at the core, humans are social creatures by nature. Humans crave escapism. I'm going very abstract here. I'm not talking about COVID trends. I'm not talking about the current hype cycle. I'm not talking about current health trends, longevity. I'm talking about humans at their core crave escapism. They crave social connectivity. That is embedded and wired into our DNA.
Right.
And there is no other viable option at the scale or availability of alcohol that gives it to people at that level, right?
I completely agree with that.
Deeply embedded into the entertainment market. It's deeply embedded into the hospitality market. It's deeply embedded into how people gather as a human species. And I just don't think that's going to change en masse, at least for a long time, right? And this is not some preach about alcohol as a concept. It's more so about humans at their core crave connectivity, they crave escapism, and until another substance is as commercially available, embedded into culture, widely accepted as alcohol, I just don't think anything comes close. So will there be people on the margins who choose not to drink? Absolutely.
Of course.
Will people want to moderate, as they should? Sure. Will they flip to non-alc wine here and there? Yeah, absolutely. And can you build a real business there? For sure. Do I think that non-alc wine or non-alc spirits or non-alc beer will become 20, 30, 40, 50% of any alcohol company's portfolio? Absolutely not.
Yeah.
I think I've said this before and I'll continue to say it. I just don't think you can really bet against booze until you see something that can give people any type of similar effect that allows them to connect socially and feel escapism and enjoy life or find that same kind of getting to a different frequency. Until you can get like alcohol.
You actually see the Pernod Ricard portfolio use the word conviviality.
Yep.
And I completely agree with all those component parts that you've said. And this is probably the longest convo we've ever had about non-alc. The belief that I have about non-alc sitting in these tasting rooms is I would advise anybody running a tasting room to have a non-alc wine or a non-alc flight on their menu. And I think it's the on-prem scenario that is going to be the one that really continues. On-prem makes sense to have at least an option. And it really, at grocery and at retail, I do think there's a consumer at home, but I think grocery, roughly speaking, is only 15% of the overall wine category.
Yeah. I think that's right.
You mentioned THC. I know THC is a major trend that's come up in the alcohol space.
Yeah.
Can you just give those that are unfamiliar, what is THC in the alcohol or the bev alc space? What does that even mean?
The big trend right now in the THC space is hemp-derived THC, because there's a unique regulatory, let's call it a loophole or evolution of how the laws have played out since the Farm Bill, that has allowed this small category of hemp-derived THC, which is literally the same kind of psychoactive THC that's just derived from hemp as sort of its root. And because it's legal to sell it in beverages, at least on a federal level, and the states are kind of one by one regulating it themselves, this is a very active concept and topic in terms of the regulatory environment of where this is going to land. But for the time being, and we think for the future, it is legal and kosher, if you will, to sell hemp-derived THC products to consumers. And the market is showing that they want it and that they like it, right? There are a number of businesses that have exploded in the last 3, 4, 5 years that are selling psychoactive beverages that have THC in them at scale. And I think it's a very exciting category. I'm personally very bullish on it. TopShelf is looking at making a couple investments in the space because I think there's some really impressive founders and teams building in the category. And more importantly, going back to what's the foundation of how to underwrite a good business, there's some good businesses out there. There's good businesses that are showing exceptional velocity on shelves and in stores, and consumers love them, and they're buying on e-com. Like, there are real businesses here. So the biggest risk to this entire industry is a regulatory shutdown, which the bigger these companies get, the less likely that seems.
I sat in a meeting not more than 2 weeks ago with a major national retailer where they were asking us what we were seeing in THC trends in alcohol. I know the minds are wondering how and where they get their toes in.
Yep.
So anecdotally, it's something that is going to be a really interesting space to watch over the next 3 years.
Yeah, fascinating space.
My last question before we jump to a wrap up is really just, if you were going to share your thoughts on macro wine trends, I've heard you say some really interesting things at the intersection of wine and national sales. What would you advise anybody in the wine space to pay attention to on the wine industry in general, beyond all this gloom and doom nonsense?
I have a lot of thoughts here. I think that the wine industry has been spoiled by 30, 40, 50 straight years of pretty exceptional performance. And over COVID, things shot up like crazy. And so the reset, if you will, has felt more painful just because it's a new feeling of like, what things are good.
A pullback in a space that doesn't have pullbacks.
Right. And so I think there's a lot of emotion in the system right now. We're fortunate because we have Grazi as our main wine business right now and is crushing, that we see it from a different perspective. We don't own vineyards, and so I'm realistic that there are a lot of things at play here that are painful, and I'm not trying to undermine or discredit the fact that there's a lot of people in the space that are having challenging times right now. That's the nature of business, and I totally understand it. I think on a 10, 20, 30, 40, 50-year window, wine needs to recognize that the foundation on which it was built, I think, is still sound, right? The connectivity of wine, the romanticism of wine, the fact that a lot of very healthy people, even the ones who are furthest on the spectrum of health, still believe that a glass or two of wine at night can be a fantastic part of your routine. Look no further than LeBron James, who all the time talks about how wine is a part of his routine. I think that this notion that some parts of alcohol have struggled with, that you can't be healthy and also drink alcohol. Number one, I don't believe that's true. I think alcohol is a massive net positive on life, and when consumed in moderation can be net positive on your ability to be healthy overall. And I think wine in particular has a lot of really good foundational intrinsic properties around how sexy it is, for lack of a better word, how much it is connected to nostalgia and history and routine and connecting with people and the artisanship of it. And I think a lot of people are struggling to understand how and why Gen Z is going to consume alcohol and what it's going to look like. I think wine is ripe to build some amazing things for Gen Z right now, because so much of the connectivity and what they want and what they're looking for, I think wine can solve for. I think the biggest opportunity and challenge for wine right now is that people have been running the same playbook for the last 50 years, right? It's why Grazi was the first to figure out that you can sell people a box wine for $50 if you market it the right way. It's absolutely doable. And so I think the big challenge and opportunity is who's going to build the modern playbook for wine? Grazzi's leading the charge in many ways. I'm obviously very biased, but I think there's opportunity everywhere for those who understand how to lean into what's worked in the past in a new way, right? It's all about connectivity. It's all about ritual. It can be a healthy part of your life. It does not need to be as aggressive as some of the other marketing. It can be more nuanced. It can be more refined. Wine is in a challenging moment right now overall, and it's unfortunate and sad to see it, but I absolutely think in a 10, 20, 30-year window, there's massive opportunity in the space, and there always will be.
Noah Friedman, TopShelf Ventures, thanks so much for jumping on today.
Thanks,
How can
man.
folks get a hold of you? Where can they find you on socials, and where can they see some of your content?
Yeah, probably most active right now on LinkedIn, but you can find me on LinkedIn, you can find me on Instagram, you can find me on Twitter. Noah Sanborn Friedman, shouldn't be too hard to find. And then TopShelf.Ventures is our website, so find us there as well.
We'll put it all in the show notes. Cheers.
Thanks. Appreciate you.
This episode was brought to you by Tastefully, the Napa Valley Winery Guide. Download Tastefully today to start planning your Napa Valley wine country adventure. Cheers.